All right, let's buy a truck. At least this business is going to buy a truck. $800 paying cash. What's involved? Again, I always look for the cash. Yeah, there's some cash involved. And what else is involved? Truck. We got cash and we got truck. So those, in this case, are the two accounts that are involved. Okay, how about the cash? Did it go up or down? That's why I like to start with cash, because it's easy. I paid cash. Cash went down. Cash goes down. I got less cash, $800 less cash. And how about truck? Well, I got more truck to the tune of $800. So the three questions are, which two accounts? Cash and truck. Did they go up or down? Cash went down. Truck went up. And how much? It's $800. So those are my three questions. Let's convert that now into debit and credit language. Cash goes down with a credit. When we're talking about an asset, assets go down with credits, whereas truck, also an asset, goes up with a debit. So we've translated our analysis here into the debit and credit language. And finally, we put it all together into that journal entry with the debit first, credit second, credit is indented. This means that the asset truck went up with a debit, and this means that the asset cash went down with a credit. Asset truck up, asset cash down. Beautiful. All right, now let's buy some equipment. $250 price, but let's pay for it later. So we're not paying for it now. There's no cash involved here, but let's think. What is involved? Well, we got some equipment involved. We also got a liability. We'll call it, in this case, accounts payable. We owe somebody some money, a payable. So we got equipment involved. We got accounts payable involved. All right. Did they go up or down? Well, we got more equipment. We brought it. We're going to start using it. So we got more equipment. And how much more? $250. Well, what else do we have? We have more accounts payable. We owe people more money. $250 in this case. So the three questions, what accounts are involved? Equipment and accounts payable. Up or down? Equipment went up. This accounts payable also went up. How much? $250. $250. Let's convert that into debit and credit language. We know when the asset equipment goes up, that's with a debit. And we know when the liability accounts payable goes up, that's with a credit. Debit to equipment means that asset goes up. Credit to the liability accounts payable means that liability goes up. So now step 3, let's put that into the journal entry with the debit first, credit second, credit being indented. And what are we saying here? When we're debiting equipment, we're saying that the asset went up. When we're crediting accounts payable, we're saying that the liability went up. Let's make that a better up. Up. Asset went up. Where do we get the money to buy the asset? We promised to buy that asset. We promised to pay later, so the liability also went up. Asset up, liability up. Debit, credit. And wait, did our debits equal our credits? Oh, yeah. Perfect.